Welcome back, fellow investors. Today, we're going to delve into the world of mutual funds and explore why they are a smart investment choice for individuals looking to grow their wealth. So, let's jump right in. A mutual fund is an investment vehicle that pools money from multiple investors to create a diversified portfolio of stocks, bonds, or other securities. These funds are managed by professional fund managers who make investment decisions on behalf of the investors. Now, let's discuss why mutual funds should be a part of your investment strategy. First and foremost, mutual funds offer diversification. By pooling funds from various investors, mutual funds can invest in a wide range of securities. This diversification helps reduce risk by spreading your investment across different asset classes and sectors. Additionally, mutual funds are managed by professional fund managers who have extensive knowledge and expertise in the financial markets. These experts conduct in-depth research, analyze market trends, and make informed investment decisions, which can save you time and effort. As fund managers, our primary goal is to generate optimal returns for our investors. We continuously monitor the markets, identify opportunities, and adjust the fund's portfolio accordingly. Another significant advantage of mutual funds is their accessibility. You don't need a large amount of money to invest in mutual funds, making them suitable for investors with varying budgets. Furthermore, mutual funds provide liquidity, allowing you to buy or sell your shares at the prevailing net asset value, NAV, on any business day. Now that we understand the benefits of mutual funds, let's talk about how to invest in them. Step 1. Set your investment goals. Determine your financial objectives, whether it's saving for retirement, buying a home, or funding your child's education. Clear goals will help you choose the right mutual funds. Step 2. Assess your risk tolerance. Understand your comfort level with market fluctuations and volatility. This will guide you in selecting mutual funds that align with your risk appetite. Step 3. Do your research. Look for mutual funds that match your investment goals and risk tolerance. Consider factors such as historical performance, expense ratios, fund manager expertise, and the fund's investment strategy. Step 4. Open an investment account. Contact a reputable financial institution or brokerage firm to open a mutual fund investment account. They will guide you through the account setup process. Step 5. Invest regularly. To maximize the benefits of mutual funds, consider investing systematically through periodic contributions. This practice, known as dollar cost averaging, helps reduce the impact of short-term market fluctuations. Remember, investing in mutual funds should be seen as a long-term commitment. Regularly review your portfolio, make adjustments if needed, and stay informed about the performance of your mutual funds. And there you have it. Mutual funds offer diversification, professional management, accessibility, and liquidity, all crucial elements for successful investing. So, start exploring mutual funds today and let your money work for you. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more insightful content. Happy investing, everyone!